Well, good afternoon, traders. How's everybody doing this afternoon? Before I get started, as always, just a quick test of picture and sound. I want to make sure that you can hear my voice and see the projection. I want to thank you guys for taking time out of your day to join us for this long-awaited and special event. Your attendance is always appreciated, and your time is valued by my team and myself, so thank you for showing up and showing an interest in what we're doing. Hopefully you guys had a good day trading. We're just at the beginning of the week, so we've got lots of opportunity for the rest of this week as it unfolds. But what we're going to do today is we're going to talk about a semi-automated way of trading Fibonacci confluence. Now, before I go any further, I have some questions with regards to the audience. And for those of you that are currently using the GOldenFibs, can you guys give me a Y in the chat box? If you guys have the GOldenFibs, if you're a customer of the GOldenFibs, if you're using them, just type a Y in the chat box so that I can understand how many of you guys are existing clients of ours. Because there's a lot of people in here, and we want to make sure that I understand who's all here before we start this event. For those of you that are not using the GOldenFibs, for those of you that are essentially new and you're just getting started with us, can you guys type an N in the chat box? An N. I want to make sure that I can segment the audience. It kind of looks about 50-50, which is perfect because what we're going to be doing today is I'm going to be explaining it from two perspectives. For those of you that are used to using the Fib confluence levels, this is going to be a serious upgrade for what you guys are used to looking at. And for those of you that are not using them, this is going to be an awesome opportunity for me to explain why structure trading is so powerful. And we're going to look at a lot of examples. I've chosen multiple asset classes to look at. So we're going to look at currency futures, equity indexes. We're going to look at gold, crude oil. We're going to look at the debt markets. We've got a lot of things to cover today. But before I do that, I want to explain what the GF system is. And that way we can get started. So without further ado, the event is being recorded. I've got my team in here to help answer questions if you have them. Please save them to the end. If you have to step out, please don't worry. We will make sure we get your recording and we'll send you all the details for the offers and such moving forward. So need to cover a quick disclaimer. Take a second to read that over before we get started, and that way you guys can understand and assess the risks in trading, and then we'll kick things off into the agenda. Okay, so I want to introduce my team. It's growing, and basically what we're doing is we're going to explain who runs each department from a trading room perspective, and essentially then we're going to talk about the Fib confluence overview. I want to explain what an internal and external output is because this is a multi-time frame indicator and system. So the reason this is explained in this fashion is because in order for us to understand the power of what Fib confluence is, I think it's important to understand the engine that's driving the calculations. I think if you buy a really fancy sports car, it looks really nice, but any car enthusiast really loves to know what's under the hood. And for you guys as active traders, if you're going to believe in a tool that you trade with, you really want to understand the power and the merit behind what you're using. We're going to give you an overview of what the actual GF system is. GF stands for GOldenFibs. MTF stands for multi-time frame. Okay, so it's using multi-time frame volatility and multi-time frame Fib confluence levels to drive the data in what we're going to be showing. And I want to basically explain structure trading and support and resistance and how average true range truly affects the effectiveness of it. How many of you guys are familiar with average true range or ATR? Give me a Y if you guys are familiar with it. Okay. How many of you guys would agree that it's important if you are familiar with it, or maybe some of you guys don't know the importance? Just type whether or not you think it's important, if it is important to you or not. I'm going to explain why it's critical to understand the average volatility of a lot of the markets, because for me, if you don't understand what ATR is, you're in a lot of trouble if you're looking at support and resistance. It's very, very, very important for support and resistance trading, especially looking at levels, structure breaks, anything to do with support and resistance, especially fib confluence. If you don't know what the average true range of your market is, you're most likely going to get your stops hit all the time. And this is why we've built this into the fib system, because for the most part, anybody that's looking at trading doesn't really understand why they'd even use it. And we're going to explain why it's critical. I'm going to do a deep dive into the indicator and the software. And I'm going to explain all of the features and the drop downs, and I'm going to explain how to manage the system, how to control it, how to basically configure all the details. And then we've got two pricing options. I want to explain this now in case anybody has to leave. For those of you that are existing fib clients, we have an upgrade price for you because this is a complete rewrite of the software. It's not an indicator, it's a system. We've taken the indicator and we've literally rebuilt it. And so anybody that's purchased the old existing fib confluence levels, we've got pricing set forth in the members area for you so that you basically get the same discount that everyone else is getting if they were buying it off the launch promo. So we've integrated that in there so that you guys aren't having to pay twice for something if you've already purchased half of something, right? So I'm very open. We always get questions around pricing, and there's a lot of transparency in what we do. So I want to make sure that there's no hidden agenda there. We've got an upgrade price and we've got a special promo price that we're going to be releasing at the end of the event. Okay, so that way we get any of the confusion or questions out the gates now. Okay, so let's talk about our team. Wow, that's a nice bunch of great looking men there. So we've got Michael on the order flow supply demand trading room. Myself, I'm the president of NeuroStreet. I've got Warren, who's going to be heading off our crypto program. I've got Raul, heads off our market profile arm. The four of us are basically collaborating and providing a collective sum of education as well as trading experience, as well as trade room knowledge and system design. Together, I mean, the experience that the four of us hold in terms of market intelligence and knowledge is just a vast opportunity for us to share our wealth of experience with you guys. Now, we wouldn't be here if it wasn't for Ashley and Ben on marketing and support. So it's really important to understand that together we all put our hats in a row, and we want to make sure that we can serve you guys. If you have questions after the event, if you want to speak to any of us, or if at any time you need assistance, let us know. We're here to help. Okay, so let's talk about this GOldenFibs system that everybody's asking about. Okay, and it's exactly what this is. It's fib confluence trading software, right? So fib confluence means there needs to be confluent data. So many people are just looking at one form of Fibonacci. They're looking at retracements, or maybe they're looking at extensions or expansions, right? Fib confluence looks at a collective sum of multiple different Fibonacci measurements. And it's the reason we call it trading software is because an indicator is an indicator. A trading system is a trading system. And when you merge the two together, you have a collective approach to using it as both, right? So this can be used as an indicator, or it can be used as a trading system. And I've actually spent the better part of this week designing probability and enhancement notes, because I'm going to teach you a rules-based approach on how to use this system for a high level of effectiveness. Okay, and I've mapped it out. I've got a PDF download that will come with the software that will explain the rules to the strategy and how to get the most out of trading the fib levels. Especially for those of you that are currently using it, have never ever had a system attached to it. I've built a system around it, and I think that if you look at this alone, you're going to change the way you look at trading support resistance with fibs. Okay, so let me talk about what this is. Fib confluence is driven by Fibonacci, and it's basically a mathematical sequence known as the golden ratio. It's always leading because we always get a chance to plan our trades in advance. This is why I think it's so powerful, because we have the ability to plan risk, plan entry stops and targets, as well as plan our comfort. Now we're using a multi-time frame algo. So let's say you're scalping the market on a 5-minute chart. You can pull the levels from, let's say, 300 days of statistical data with only having to load several days on your chart. Now that's the original engine. But what's important to understand is that it's always expanding or contracting. This is why having a system component to the software is so critical, because average range is always expanding and contracting. So as the market trends or as the market becomes oscillated, the levels of support and resistance are always going to be contracting or expanding. And this is why it always needs to be auto-updating, automatically dynamic, so that it's always automatically adjusting to the current market conditions. If you were to just plot support and resistance levels on your chart and the market moves, those are no longer valid because structure's changed, right? And this is why it's critical to know the dynamic aspect of what it's doing. And the goal of Fib Confluence is to not plot just one level of Fibonacci. The goal is to take multiple levels and make sure they all line up over multiple time frames to be able to produce a trusted level of trading merit, right? How many of you guys find that when you trade any level, let's say you're trading support and resistance, supply or demand, maybe you're trading divergence, maybe whatever the case may be, how many of you guys find it frustrating that when you take a trade and it works one day and then the next day you try to take the same trade and it doesn't work? Right? Because the level didn't hold this day, right? I've been there. I understand what that feels like. How many of you guys are experiencing that now, where sometimes your trades will work and then sometimes they don't, but it's the exact same level. It's the exact same visual context of the market. Anybody here feel that way? I know Frank's saying yes, Albert, Thomas, Howard. Give me some honesty, guys, because I feel it as well sometimes. And there's nothing worse than cheating ourselves of the truth, right? And this is exactly why I've built a system enhancement notes and PDF, is because I'm going to show you how to filter out trade levels. I'm going to show you where you should be looking to buy support and resistance versus where you shouldn't. And you can apply this to anything. You could apply this also to divergence, supply and demand, support and resistance, because that's what we're showing you here now. But this can be a universal approach to filtration, okay? Now, let me kind of explain what we're doing with Fib Confluence. We're using 6 measurements of Fibonacci. So whenever we see a chart with a Fib level on it, which we're gonna spend a lot of time looking at charts. I just want to explain some of the context first, so the theory's out of the way. Fibonacci is measured in many different ways. Some people use retracements. Some people use expansions. Zigzags are very important because it measures the swings of the market. Projections and measured moves looks at alternates and extensions. So basically looking at the measured move of point A to point B versus point C to D, right? This is how market geometry is formed. But what happens is a lot of times traders will try to draw a retracement, and then they'll draw an extension, and then they'll draw a measured move, and then all of a sudden they've got a whole bunch of stuff on the chart, and he can't make a decision because it becomes information overload. So what we do is we process this not only on the same time frame that you're trading, but also on multiple time frames using the MTF algo. So it's processing all 6 of these at the same time, and then it's processing them over multiple time frames, so 300 days of data. So let's say you're scalping on a 5-minute chart. Every time you see a level, this is what we consider the internal output. So this would be an example of, let's say you get a whole bunch of levels on your chart. Every one of these represents one of those 6 variations. There's no way you can trust that because you don't know which one has strength, which one doesn't. You don't know which one you want to trade versus which one you don't want to trade. And it's next to impossible to basically understand which one has got more power or which one you want to trust. So what we do with Fib Confluence is we actually take the 6 measurements and we say, okay, on the chart, where do all 6 of them line up? So if you go back here, there's several locations on a chart example like this where you can see multiple levels overlapping each other. And those levels are from multiple time frames, not just the one time frame that you're looking at, right? And this is an old image, this is an old example, but we're going to look at recent charts for the rest of the event. And so there's a reason why price reacts so strongly around these areas, okay? But I want to talk a little bit about what anybody in here with any trading experience, okay, is going to say, well, yeah, you've pointed out all the good ones, right? You pointed out all the good ones, right? But what about this one where support failed? Okay, what about this one where resistance failed? Okay, or why did it overshoot support here and then finally hold? Or why did it break support here? This is the big question that everybody should always ask, Because any vendor, including ourselves, can say, we've got some great software and you should buy it. What I'm here to show you today is that we're going to show you how to take great software and how to make it extremely accurate so that you know how to take the certain trades that you should be taking versus the ones you shouldn't, and understanding why you want to trust those. Okay, and that's why we spent months building this out, because this is not just an indicator. The indicator is the driving component. The system is how you plan risk around it and how you trade it. Yeah, so Kay says it's all up to buyers and sellers. Well, what's interesting is that none of these levels would ever be here if the market didn't buy or sell or change direction over 300 days, right? You need buyers and sellers in order flow. You need order flow and you need volume to create the market movement. And then basically market movement creates patterns. Market patterns can be measured, which creates market geometry. Market geometry creates measurements of mathematics. If we really want to get technical, that's how market Fibonacci works. You need order flow and volume to unfold first before patterns in the market can persist, right? And that's why volume and order flow create the liquidity, but that does not remove merit around market structure. Market structure is very powerful, okay? So let's talk about what the system is. This is a trading system. So it acts as an indicator, but it is also a semi-auto fib confluence trading system. So what does semi-automated means? It means it does everything except for take your trades for you. So it plans your trades. It plans your risk. And it also automatically calculates volatility so that we can detect buy and sell zones around fib support and resistance. And the core of it is using fibs, structure, and ATR. Okay. And what I'm here to do is I want to teach you directional filters. So what I'm going to do today, after I've demonstrated all of the components of how to use the software, I think this is the most important thing on the slide right here, because we're going to have support and resistance levels on multiple markets, and we're going to have opportunities always in the market. If you're going to use a piece of software to trade with and expect consistent results, you need to have a selection process in place that is firm, that is reliable, and that can reduce risk and increase profit potential as you unfold your consistency, right? And that's what we're here to do. I'm going to share that with you, and we're going to spend a lot of time talking about that today after we go through the software. Okay, so let's go in here and take a look at some examples. So we've basically integrated an engine, if you will, that is basically a dynamic planner. And this dynamic planner will plan long and short positions simultaneously. You can choose to turn one off versus the other. You can also basically create different measurements of the average range, the size of your buy or sell zones. You can also create the size of your stops based off volatility, and then your risk and reward for your targets. And this is basically an example of a long trade or a long example around fib support. And all I'm doing is I'm showing visual graphics around basically how these would be turned on. Now we're going to go and we're going to go through these one by one on the charts, but for the most part, it's all done through what we call a trade plan master selection process. Okay, now the same thing for the shorts. Okay, the shorts is basically just looking at the opposing side of structure, right? Everything's done through the master drop down. Everything is driven by the average range and volatility. Yes, it is, Reese. It's definitely being recorded. And basically you can control everything. And you can control everything by basically forming your ATR periods first, which dictates the size of your sell zones, which dictates the size of your stop losses and your target potential. Okay, now I've got rules that I found the sweet spot. And as the developer and the architect behind the software, I think it's important to know that everything has its own settings, right? You can take a system and you can apply it to one market, and it might be different than the others. So what I've done is I've basically gone through multiple markets and I found the sweet spot, if you will, and we've set the default settings to the system so that it basically makes real good sense to go out the gates using it like that. Now, obviously, everybody in here is going to experiment. They like to trade with different settings. They like to add it to different charts or different bar types or different markets and time frames. Moving forward, I just want to explain why we set the defaults this way, okay? Because I spent hundreds of hours looking at charts, using it on different markets, different fractals, volume charts, time charts, range charts. And so I want to explain the importance of the settings, okay? So another thing too is the big question is, are you trading trend or oscillating markets? Give you an example. This is an example of a trend structure. So we've built in trend detection based off price action and structure swings. So you may be using momentum. You may be using oscillators, overbought and oversold, or just straight up momentum tools. A lot of people look at trending price action for trend direction. But what we've done is we've built in price action from a trend direction standpoint so that if you're looking to trade simply just with trends, you can do that. If you want to know the difference between trends and oscillation, gray backgrounds is oscillation, green or red background, okay, is essentially trending markets, right? And these are examples of long and short trades that we're going to talk about. We're going to show multiple trades from today's price action, and that way you can see what it did today on many different markets. Okay, so I think the best way for us to do this is to just look at charts and go into a deep dive and explain how to use it. Okay, can you guys give me a why if that kind of made sense just up until now? Just give me a why if that kind of made sense. You guys are following along. I wanted to keep it simple. I wanted to keep it to the point, and I want to share with you how to trade it. Okay. So down at the bottom, I've got the NASDAQ, the ES, the Euro, the British Pound, the Yen, crude oil, gold, and bonds. There should be enough opportunities in here for us to show confluence and consistency across multiple markets for today's trading action. If we're not able to find multiple trades across these markets, something's wrong, right? And what I've done is I'm using volume charts for every one of them. Now, a lot of people are saying, well, why do you want to use volume charts? I prefer volume charts over time-based charts because I find them easier to read, and I like the way that I can read structure using them. So you're going to notice for these examples that each of these tabs have a different volume fractal. They're all equivalent to an 8-minute time frame. So every single tab I have on every single market is using a different volume chart, but they are all equal to, if let's say we were to apply an 8-minute chart across the board. And there's a reason for that. Slightly smaller than intra swing, slightly larger than day trading scalp. I like to trade in between because I don't like the noise of scalping, but I don't like having to have huge stops, and I don't like to have to wait too long for trade opportunities because then it becomes a little bit, it's just too passive from an intraday perspective, right? So I've met in the middle, and this example for all of these markets is an 8-minute time frame. Does everybody understand that? That way there's no confusion. No confusion, right? Perfect. So what I want to do is I want to explain the drop down. Okay. When we go to the drop down up here, there's 3 sections. Okay. There's 3 sections. You've got a trade plan master, you've got a market structure settings, and you got an average tick calculator. Okay. Let's talk about the trade plan master. Depending on if you're looking to buy or sell the market, you can turn the dominant trade to long, short, or none. The main thing is understanding whether you're looking to buy or sell the market. So let's say we were planning on, let's just go back here for a second. Okay, let's just go here. No, they're dynamic, Vittorio. So Vittorio's asking a good question. He says, are the fibs updated every 3 to 4 hours? Or no, they're always moving as the market moves because they're using 6 measurements of fib confluence, and they're basically dynamic to the market. So as the market expands and contracts, they're always moving, they shift. Okay, because the volatility is shifting of the market. So let me give you an example. Okay, This is a structure break. We broke out. There's a Fibonacci support level down here, okay? So to most traders, that's a bullish bias. Yes, Kim, all the stops and targets will move as well. Yes, we'll talk about that. So let's say we're looking to plan along this environment. So I would go to the Trade Master Planner, and I would basically turn long trades on, and I would turn near trades on because it is the closest fib level to price. If you wanted to plan the next trade out, you could trade the next level down. If you wanted to have them both on, you could plan them both. It gets a bit confusing. I tend to want to just trade one level at a time, right? So this is how you would look at this. So what I've done is I've turned long trades on, and I've turned near trades on as well. Now, what is this telling me? Okay, well, this is giving me a buy zone down here. This is giving me a stop loss, and I'm going to turn this to long. You see how if I change this to short, see how it moves everything around? It's because it's how we visually want to see the targets and stops in the entry locations. Okay, now you're going to see down here on the right-hand side is there's a buy zone down here, and there's a stop loss. There's an E for an entry, T1, T2. Now, let me stop right here because this is where we need to understand what these buy zones are doing and how they're calculated. It's very, very important you understand that these are what we call a buffer zone. So what is a buffer zone? Let me kind of explain this for a second. I'm just going to pick a random level of support and resistance, okay? Let's just put a line right here, okay? So this is a structure of resistance. Okay, I'm going to turn the system off for a second so that we can keep it consistent. And you'll notice that there's several levels of resistance here. Well, let's say we break above it. We have to understand that price is going to react around support and resistance based off an area. It's never an exact science. It's never an exact to the tick accuracy. Sometimes price will come down and retest it to the tick. Sometimes it'll trade up and come back down a little bit, right? Hit a buffer zone, right? And depending on the average volatility of your market will dictate how much above and how much below we can expect price to overshoot or react off support and resistance. This is what's driving the fibs because every fib has a buffer zone. So I'll give you an example. We broke out of support right here, okay? Well, before we ever get back there, let's say we just break support like right on that candle. There's a buffer zone that goes around support and resistance on all levels. Do you see what happened on this one? Price came down and tested down here. Not to the exact tick, it came within the buffer zone, okay? Same thing down here. Price broke out, came back down, retested the buffer zone. Why is this important? Because sometimes price will come back and tag it to the tick, where other times it'll come back close to an area and react. See how this one came in here? It didn't quite come back to the tick. It came down within a couple ticks, right? It's because it's reacting to the average volatility of this structure level of resistance, which became support, okay? So it's about understanding how support and resistance reacts. Give you an example. We broke above resistance here, right? We broke out here, but why did we not come back down to test it to the tick? It's because there's a buffer zone around breakouts and around structure that basically the market factors in, and it's normally driven by the average true range of every market because price is expected to react off of levels of support and resistance based off of the average volatility of the market. And it's all driven by order flow and volume. So depending on the sentiment of collective psychology, meaning depending on the bearish or bullish bias of the breakout will be depending the strength of the move and how far price retraces back into those areas. So what I'm going to do is I'm going to explain, we'll go back to this trade example, okay, and we're going to talk about it because each Fibonacci should be traded the same way. It's a level of support. It's a level of support. And so what we're doing is we're looking at the average range of every single fib level of support and resistance, and we're saying, okay, what's the average buffer zone for this market? based off of these levels, based off the average range. Now this can be smoothed out. You can increase it, you can decrease it. I set it to 13. Normally the average true range default in your platform is 14. I set it to 13. I found it to be more responsive. And what we're doing is we're saying, okay, I want to take half of that zone, half of that buy or sell zone, and I want to nest it above or below support or resistance depending on my bias. So let's say you have a buffer zone like that, okay? Let's say that's your average true range. Let's just assume it's a certain amount of ticks. Well, I'm going to actually give you an exact amount. It's 54 ticks. This is a NASDAQ chart. Let's say 54 ticks, okay? So let's take half of that, and that's 1.25. So let's just say the average true range, I'll even add it. Let's just add a 13 period ATR in here and we'll show you. Okay. We'll just add a 13 period ATR. Okay, so that's 9 points. So the average true range of this market at this time was 9 points times 0.25, right? Divided by, 9 divided by 0.25, 36 ticks. So the average true range is 36 ticks. So what we're saying is we're going to take half of the ATR, okay, and we're going to basically say, okay, we're going to put that above, and that's your buffer zone. That's where we expect price to react based off of support, off the fib level. Now, you could enter at the edge of it. You could enter in the midpoint. You could enter at the fib level, right? That's all going to change your risk, right, on how you choose to enter into an area. And what we've done is we've created a component that, and you can see how it's not completely exact, pretty close, just freehand drawing it, right? But you can see that there's the buffer zone. Now you see the entries right at the edge of the zone. If you go into the settings, we have an option in here that basically allows you to choose your entry. Right here it says at fib price, at mid price, or at ATR. I like to think that the mid price will reduce risk, but it'll also give you an opportunity to not miss as many trades if you were to say hit it at the fib. If you put it right at the edge of that buffer zone, you're going to get filled more times than not. I'm going to put it back, right, for the examples here, and your risk is going to be a little bit larger, right? It's really about how you choose to reduce risk, and you can put it at the fib, but you're going to miss trades like that. I can assure you that, because you're being too risk adverse, but it's dependent on the trader. So what we're doing is we're saying, okay, based off of this system now, we've got the average range, which is driving our buffer zone. We've got the entry zone, which is half of the average range above or below support or resistance. And the stop loss is 1.25 the ATR. So this is really important. If you put your stop loss at 1 ATR, how many of you guys think that would be very tight? Give me a Y or an N, and there's no right or wrong answer here. I just want to see whether or not you guys have an understanding of stop losses. If we set the stop loss to the ATR value, what happens is the chances of price coming and tagging your stop loss becomes magnified or amplified because it's not giving enough room over the average range of volatility. And what we're saying here is that if we're entering here at the edge, this is 1.25 the average range of the market. So what we're saying here is that your stop loss is here because it's 1.25 the ATR, right? Yeah. Now you can adjust this. You can basically come in here, you can add this to 1.5, 1.3, 1.75. You can put 50 for all we know, right? You want to give it some breathing room, Barnell says. Exactly. So that's why we have it at 1.25. However, these targets are at risk and reward multiples. So the T1 is a 1-to-1 R to your stop size. So it's 1.25 the ATR. If you put this to 0.75, okay, or actually I think it's set to 1 minimum. Okay, actually let's go back here. Sorry about that, guys. Let's go in here and we'll put that in here. I don't think it likes decimals. Give me 1 second here. Reload it. There we go. 1. Okay, you set it to 1, and it's going to be an ATR. Okay, 1 ATR distance of your stop loss. Okay, so what that's doing is it's saying, okay, it's giving you an RR multiple. Okay, and then this is giving you T2, which is 1.5 ATR. Okay, right here. This is a 1.5 risk and reward for your stop size. Now, why are we driving it like this? Well, because it's all volatility based. Support and resistance is volatility based. It's the cleanest way of looking at your charts next to looking at everything else you're looking at. For me, you strip all the other indicators off your chart, and we're going to watch and see how price reacts to these areas. Okay, so price is coming in. This zone is planned in advance. Okay, there's your entry. There's your T1 here. Came back down. It didn't quite hit it. It didn't quite hit it again. Okay. Now this was the NASDAQ this morning coming in off the open. Okay. This is the NASDAQ off the open. Now that's a decent trade. Okay, that's a decent trade. Now, that's just to the long side. If you were planning a short, turn the shorts on. Okay. Yeah, it's Eastern time, Kim. Yes, Eastern time. If you're planning a short, okay, this could be an opportunity. Now, I'm going to tell you right now, based off of what I've built for you guys, I've built a system document. This is a system document. This is accompanying the strategy, because I don't want you guys selling every single support or resistance and buying every single one, because you're not gonna make money that way. Because now you're just expecting every single level in the market to work, and that's not how trading is, right? That's not a system. That's just trading software. That's red light, green light. We don't want that. And I want you to be able to report back and say, I'm getting extreme consistency. So what I want to do is I want to explain how the drop downs work and show you how this software is manipulated. And then I want to shift gears for a second, and I want to start talking about a rules-based defined strategy. Does everybody understand that? Give me a Y if that's okay with you. I'm going to open up my office window here because it gets a bit warm. And we've had some rain the last couple of days, so all the contractors are on a day off, so it's nice, not too loud. So what's nice about this is you have the ability to plan support and resistance at the same time. Okay, and you can do so if you choose. For me personally, I only want to ever be looking at one part of the market at a given time. That's just my preference. So it really depends if you're looking to go long or if you're looking to go short. Okay. Now, one thing I want to point out, who in here puts a heavy emphasis on money management? You guys tell me if you guys think risk and reward or position sizing, money management is important to you guys. Hey, Brian, nice to have you in here. Wasn't sure if you'd make it. Definitely. Everybody says yes. Okay, so here's what's interesting. How do you know where to place your stops? That's the question, right? Where's your stops and targets going? Well, what we've done is we've basically set the average tick calculators. This is updating all the time. So it's not going to change a lot, but it's going to change as the market unfolds, because what it's doing is it's moving as the ATR around the fibs are moving. So as the fibs are updating, it's automatically changing the size of your average stop loss. So if you go in here and you basically say, okay, stop size is 1.25. If you set this to 1 ATR, okay, and you go in here, your average stop loss should be the equivalent to the same amount of ticks as your ATR indicator on your chart. So if I were to add an indicator on here and I add ATR, okay, if I go back and add the ATR on here, okay, but the only issue is with this is that it's only looking at the average range. It's not looking at the average range of every fib level. That because think about this. This is what's really important here, guys. Take a look at the average range where it is now. And that's what we're doing. We're looking at the volatility of these fibs right here, because that's what the average range is. But what happened back here? The fibs had different volatility. There was different volatility in the market. So it's not dynamic. If you were using static measurements, that's different. This is dynamic measurements. So what we do, if any of you guys are ever familiar with the SD volume zones, which I know a lot of you guys are, we've got stop loss calculators that look at every single supplier demand zone. What we're doing here is we're looking at every single fib level, and we're calculating the average risk for each ATR on the fib, which allows you to build a money management model that is consistent for whatever market and whatever time frame you have, which in me is really, really important. Okay. So let's kind of basically take a look at rules to trade this, because I have specific rules that I've basically mapped out, and they're very simple, but they're very important. Okay. Now, some of you may write this down. Some of you may take some screenshots. That's fine. But without using the tool in conjunction with this, it's counterproductive, right? Because this is designed in a way for you guys to get the most out of using support and resistance for profitability, okay? So let's go in here and talk about this. Is a probability notes and enhancement document. So the whole goal of this document that will come with the strategy and the system and the software is to make sure that you're only buying and selling support and resistance at the right location of an auction. And what's an auction? You're probably asking. An auction is a trading day. Each day we come into the market, it's an auction. Today we had an auction. Tomorrow we'll have an auction. Yesterday we had an auction. Our goal is to understand where we are trading inside that auction so that we can put an emphasis on support or resistance for trade location. This is equally important for divergence. This is equally important for supply and demand. This is completely transferable. So what we're doing here is we're saying we can only buy the market in wholesale price levels. Wholesale means you want a good deal. So if you're going into the market and you're trying to trade and you say, well, how come my long worked earlier, but this one didn't? It's because most likely one of them was in a different location in the auction. Okay. But here's the kicker. Being on the right side of the auction is not as important as being on the right side of the auction and having market structure supporting your auction direction. Now you're going to have less trades, but your trades are going to kick butt. Your trades are going to be awesome. So what I always say is instead of trading one or two markets with a whole bunch of strategies, it's better to trade one strategy over several markets because you get real good at the one punch factor. So this is an example of how to master structure trading and using auction theory on the right side. Now, where did I come up with this auction theory idea? You're probably wondering why it's relevant. It actually came from studying market profile, and it actually came from studying volume profile, and then looking at structure at, when we're above or below value areas and when they reverse the market. What do I mean by they? I mean the institutions. That's the only ones who's moving the market. Okay, so What I'm going to do is I'm going to basically start by saying we only sell the market in retail price levels when market structure is on our side. Now, how do we do this? This is very important, okay? What I've done is I've modified a Fibonacci tool. Okay, so I'm basically going to just go in here. So you can go into your Fib tool. Okay, you can go into your Fibonacci tool and you can basically change. Let's see here. And the lines. Data right there and the lines. And I'm probably right there, the anchor points, the levels. There we go. So what we can do is you can extend the lines, you can change the fib retracement, right? You can adjust these levels. You can change them to be different levels, right? Your anchor point, the levels, 7 price levels. You can go into the edits. You can edit these. What we do, okay, what we want to do is we want to edit them to 0, very important, 0, 25, 50, and 100. Okay, and why is this important? Because we're separating fibs into a grid. I'm not looking for the 61.8. I'm not looking for the 50. I'm not looking for the 123. I'm looking to separate the day into buy and sell locations. I'm mapping out my auction for the day. Does everybody understand that? We're going to start by just looking at modifying the fib tool. Okay. Now, this is very, very important because it's going to tell us where we want to be wrapping our fib levels around. Because if you get this wrong, then you're never going to be on the right side of the auction. And then it's completely useless to buy or sell support if you're on the right side of the auction or on the wrong side. And if you're trading divergence, this is great. If you're trading supply or demand, this is great. But since this is the fib system, I want to show you how powerful the fib levels are on the right side of the auction. It's just amazing. So when the current high of day and current low of day are not clearly defined by structure changes, we take prior day's auctions. So what I'm going to do is what's a structure change? So let's just start by the Globex. The Globex started right here. I'm going to draw a little line, and we're going to draw a line right there. Structure change is defined by a close above structure. So there's a structure change. Okay. And at that time, okay, let's just go back to the Globex. Right there at that candle, that was the first low that was defined by the day. So that would be considered the low of day, or the Globex low. Okay. Does everybody understand that? At this time, that would be the Globex low. The Globex is the overnight trading hours. So as the market goes up, we've defined the low of day so far by the overnight session. This would be considered the low of the overnight session. But you're going to notice that we don't have any price action trading above us here. There's nothing up here. There's nowhere to wrap lines around. So we don't have an auction defined. We really don't. So ultimately, we can't wrap anything around this yet. We know we've put in a low right there, but we have no bearish structure change, right? So we have bullish structure change. We took out the high with the low. So technically, as much as this trade looks super fancy and nice, following the rules of what I'm about to show you, we would not take that trade. What I want to do is I want to go over here and I want to show you. Now we've created some highs, right? But we have never broken structure. So we're still to the buy side of this market. If we take out this low, then we can consider we have structure shift down. That would be considered the high of day structure change. This would be considered the low of day structure change. And then what we could do is we could wrap an auction around that, but we don't because it hasn't taken it out yet. So we're continuing up. Never did define the auction. Right here. This is very, very important. We had a close above a structure change here. And now we've had a close below structure change there. That is considered the low and high of the auction. Okay. So I would wrap my fib levels like this. Okay. Because what we've done now is we've defined where the buyers were in control of the market and where the sellers were in control of the market. Sellers reverse the market, buyers reverse the market. Does everybody understand that? Give me a why if this makes sense to you. We're going to do several days. Don't worry. Because if you get this right, you're going to crush this. You're going to kill it. It's going to be amazing. Now I want to do this. Let's put a little box like that. Put a little box like that. And we're going to turn this to red. And it's not going to give it to me, so we're going to find it. And we'll leave that to green. Just like that. So what I've done is I've basically mapped out where I'm allowed to buy and sell the market. So anything over here or anything down here, I'm allowed to buy or sell. But that's step one. This is step one. It says we only buy the market in wholesale price levels. Green is wholesale because we've defined the auction. We only sell the market in retail price level. Red is retail because we've defined the auction. But there's one other caveat, and I explained this earlier. It says market structure must be on your side. Now let me explain what that means. Let's say price just kept dropping and dropping and dropping and dropping and dropping. Just because we're down here at this fib level does not mean I want to be buying it. Because how do we know that the market's going to stop on that fib level? How do we know that that support level is the one that's going to hold? What if it doesn't go down to find the next support level or the next one? Sometimes it's real simple. We don't want to step in front of a freight train coming at 100 miles an hour because even the driver can't slow the train down fast enough. Right? Think about this. If you're standing in the middle of a field and 1 million people from around the world start charging at you, do you want to try and stop them? Give me an answer to that. Could you stop them? They would run you over. Think of the market like that. Think of it like that, because essentially that's what happens when you try to stop a falling knife. It's going to cut you. Same thing with support and resistance. Same thing with supply or demand. Same thing with buying or selling the wrong divergence in the wrong locations. It's all about trade location. So yes, we've got amazing fib software. Without a doubt, it's awesome. But it's 10 times better if I show you when to be buying fib support. In this situation, okay, let's move this over here. Structure is on our side. We are sitting up here at resistance, okay? But now structure became on our side at the close below that. So as soon as it closed there, we now are above the 50. So we're up in retail location, right? But now structure is also on our side. So you need to be breaking structure and you need to have a close below structure in order for that to be confirmed structure on your side. Does everybody understand that? If this was right now, what I would do, I would turn my trade plan master on. I would turn my shorts and I would look at turning my short on and near on right here. Boom. Now I'm gonna move this out of the way here for a second. So You can see, I'm just going to move this out of the way for a second because that way I don't confuse the viewpoint. So, and it's not the lows. Let's say price came down here. Let's say price came down here and the low came down, but then it closed way up here. That's not structure on your side. That's the lows taking out lows on that structure, and that's not confirmed sellers. Confirmed seller is a close. I want to close below the low because the closing price dictates sentiment. Where's the entry? Right here. Right here at this white line. There it is. Right there. This is critical. Remember what I said about the buffer zone. There's a buffer zone. Okay. There's a buffer zone. Brian, no, because the original curve that was designed in the SD volume zones and the how do I say this? The the print profiler uses a different algorithm. It does not look at structure. It just looks at the strength of ATR from the high or the low. We've rewritten this, and we're going to be doing an upcoming webinar where we define, we're coding a daily auction. Not a problem, Paul. So we're in the process of developing a software indicator that does this daily auction detection for you, right? Thomas says, this is similar with your SD zone strategy. It's the same selection process. It's the same selection process, Thomas. So let me kind of explain why this is important. Because take a look at what happened here. It came literally to the tick to this buffer zone. Why did it not come all the way up here? This is important. If you were sitting here getting ready to get short at the fib level, well, you're never in that trade. Where's your ATR targets? Where's your stops? Where's your targets? Your T1, okay? T1 is essentially based off the ATR, okay? So let's move that down. T1 is here. T2 is hit there. Now it came down to the fib level. We are not buying that fib level. There's no way in heck you want to be buying that fib level. You say, well, why not? It worked. Yeah, but you're on the wrong side of structure. So you say, well, that's only one trade. Yes, that's only one trade. Take a look how it failed here. We're not selling this resistance. Your job is to trade smart, not often. And sometimes I need to take the same advice that I share with you because we all overtrade sometimes. We all take the wrong trades, or we all do that sometimes. My goal here is to share with you that this to me is a high probability short, screaming to get short, defined by the fib buffer zone and the right side of structure on your side. Now let's go back. Let's go bar by bar. Let's continue. This is still the low auction of the day. We never did take that low out. Okay, take a look here. Do you see how we form structure here? We're on resistance. Let's continue. Do you see how the high went above that structure? Is this a structure break? From what I told you earlier, someone asked a question with the low. Is that a structure break? No, exactly. No close, Lynn says. You're absolutely right. No close. We want to close. There it is. Take a look at what happened. We turned support. We turned support. Now we're going to go to the trade planner. We're going to turn this to longs. We're going to turn shorts off, longs on. Okay. Now at the close of this bar, at the close of that bar, and the open of the next bar, this would shift it. This would have shifted up. It's because it's not on real-time data. It's on bar by bar historical. This would have come down and hit the low on that candle right here. Do you see that? So if you're wondering in real time, where was the entry? It was right here, right there. Okay, that's the trade. That's the trade. Now you're at the high of day reversal, catching the short off resistance. You're now at the new low with structure. Where's target? T1, T2. These targets can be changed. These targets can be changed. It's up to how far you want to hold them on. If you're risking 1.25 ATR, a 1-to-1 risk reward, it depends on your comfort for temperament. If you're someone that likes to scalp, you're not going to be trading on an 8-minute time frame. Well, Stephen, it depends on the market, right? This is $5 per tick, right? With approximately a 50 tick stop. That's a 4-point, it's, to me, it's a big stop loss. But I'm using this because if I were to look at small time frames, then we got a lot more noise and it's harder for me to teach rules for a strategy, right? The less noise, the better. Let's go to the ES. Okay. This is the ES equivalent to an 8-minute time frame. Okay. Let's wrap our lines around structure. Let's go here. Let's go bar by bar. Okay, there's the Globex. There's the Globex. There's the low. It broke above and closed above the last structure high. So we can put a line here, okay, because it did close above it. However, we can't go back in time because there was no structure high above us. So we need to wait for the market to put in a high and change structure before we can map out our trading environment. What do you think that does for your trading mentality? Anybody here have an opinion on that? By basically waiting for the market to show you where they're going to roll it over. Exactly, Sorum says, patience. And it also shows that you're willing to let the market show you what it's going to do. It's kind of like standing in the middle of the football field and then everybody running towards you. And then all of a sudden they stop and they say, hey, come with us. And you turn around and you get to run with them. That's what this is doing. You're not getting run over by them. They're saying, hey, come with us. We're gonna let you join us. And you're waiting to get into the right location. So that's what this is doing. So let's kind of continue up. There's a high. We didn't take out the structure low, so that's still considered a structure right here. There's another high, so we're still considered structure. There's it right there. Boom. Done. Now this is passive. This is an 8-minute time frame. So ultimately, if you don't like to wait on a larger time frame like this, you could do this on a smaller time frame. You're going to have more noise. However, 5-minute to 3-minute time frame is adequate. Okay. So what I've done is I've mapped this out now as structure break. So I can basically do this now. I can take my fib level and I can map it here. Now I'm not allowed to buy support up here. I'm allowed to sell resistance. Okay, I'm allowed to sell resistance. So we're going to go here. There it is. There's the resistance. We turn the system on. Dominant plan short because we're in retail locations. We're looking to plan a short trade. We want to turn the near ones on. Now remember, at the close of this bar, open of the next bar, the buffer zone will flip down because this was the breakout bar. This one is where the fib shifted. There it is. So the entry is right here at the high point of this candle. Right there on that bar. Okay? The entry is on that bar. Now, we're getting close to the midpoint of this curve. You have higher probabilities taking shorts up here. You have higher probabilities taking longs down here when structure is on your side, but it's still valid. There she goes. These are big trades. These are good trades. These are not, you're not taking a whole bunch of them. You're taking ones that really matter. And you don't have a lot of confusing other stuff on your chart saying, well, this indicator is telling me this. Well, that indicator is telling me this. Oh, but I have momentum going up and I have a demand zone here and I have a fib resistance. Like, there's so many mixed messages by using too many things on your chart. This is the cleanest way to look at support and resistance trading that I've ever seen. So if you're looking to believe and have simplicity, this is the answer. Now let's watch what happens. Okay, we don't buy that support zone, by the way. We don't buy that. And here's the thing. We could come back up and sell that resistance again if it got there, because we are still at the right location of the grid. And structure is still on our side. Didn't quite get there. Did not quite get there. Now, one thing you can do about the fibs that I forgot to mention earlier is you can change how many fibs are on your chart. I have them set to default. You can turn them to small. Turn apply. Let's keep going down to smallest. Now let's see if a fib level came in here. See how it came into that fib right there? So you can add fibs and remove fibs by looking at the size of the swings in which the system is driven for. So the cool part is that I had it to being very restrictive. Way less fibs, but much stronger. If you drop the swing time frame down to smallest, take a look. You have the ability to short that. There was a fib there. Let's go back to it. There was a fib here. What I suggest is first identifying your market, identifying your time frame, and then going in and adjusting the strength of your swing to match the structure of your market. You're going to be able to see how many fibs are really respecting price action, right? There's the entry here. There's target. This is today, guys. These are trades that took place today in the market, following this methodology, following this update, following these rules. Now, let me go back and explain something here. I want to make sure we map out the rules of the strategy because this is borderline. Coming back here, I would be entering at the fib price. I would not be entering here at the entry. Why do you think that? Anybody here want to give me an example as to why we would think that? Let's bring this to the high. Anybody here want to say why I would look to enter at the fib price as opposed to down here at the E? Even though the zone tells us that you could enter at the E, does that meet the strategy? We want to be buying the market in value and deep value. We want to be selling it in deep retail and retail. This is a continuation area. Sell continuation area is where we're at right now, 50. Front running that 50 by a tick it's a subjective decision, but I still think that most traders can do that. But I would not look to be entering down here because you cut out the risk of it working. You increase you decrease probability of your levels holding down here. This is the ES. Let's take a look at the euro. Okay. Let's go in here and see the euro. Now here, what's interesting about the euro is it gave us previous price actions. So let's go into the day. Okay, let's go into the day. And you see how we had a close in the Globex above the last structure break? So technically, we had a close above the structure, so that was putting in a low of day, okay? But we don't have a high of day defined. We don't have a high of day reversal structure. So what we can do is we can go to the previous day's high of day structure change, which was right here. See how it changed structure right here? We had a close. So what I do is I wrap my fib from here to here. And there's your grid. Okay, now you know that you're off the low of day structure so far from the Globex. And this is for all of you traders in the euro or you're trading the overnight session. Okay. and you take the high of day from the previous auction because they've clearly defined yesterday's auction. And if we were to wrap a volume profile around this, you're guaranteed this right here is almost always going to be above the value area high, because that's where sellers come into the auction. So if we look at this, we could plan that support level down here. We could plan that. Let's see if it worked. Long trade on, right there. Let's take a look. The entry is right there. Let's see. Yeah, I'm trying not to force that. It came down to the tick. May have got the fill, maybe not. Why is it reacting there? Okay, take a look at this. Came right into the area. Look where the stop loss is. Now, if you're taking that trade long, if you were to just have your stop in some random place, look what happened to volatility on that. The volatility got factored in. Your stop's way down here. Your stop's way down here. There's a reason your stop's down here. Because it's driven based off the market structure and the average range of this market's fib levels. So it's auto-adapting, and you always have it on the right side of your structure. Does that make sense, guys? So having your stop down here, even if it overshot the area by a bit, that's okay. Your stop's factored into that. Not having too tight of stops is really important, especially around structure trading, because you have to make sure that it accounts for you being able to let the market breathe. Now it came up to hit target. Can we take this long right here? This is the next question. Can we take it long? Where are we in the fib levels? Where are we in the grid? Let's go back to the system rules for a second. You can buy fib support with bullish structure and prices trading at the lower 50% of the high of day, low of day auction. We are below 50. We are now in what we consider a trend continuation environment. Got stopped out. Imagine that. I showed you trades on the NASDAQ, the ES, and the Euro, and we took a stop out. However, are we still on the right side of structure right here? Where are we in the grid? We're at the low. We're also at below 25%. Okay. Got stopped out. I want to ask you a question here, and I want to ask you if we are going to move our grid. We had a close, and this is where we would, this is advanced, but I want to teach it to you anyways. This is advanced. It's important to teach you advanced stuff because this is sometimes looks quite simple, but it can be advanced. Did we have a closing price below structure right here? Do you notice how we change structure here? Write this down. If you're in a trade and structure changes against your system rules, exit the trade. Get out of the trade. It's better to take an exit right after you got into the trade when the market starts to shift against it than to hold on for your rest of your life. Because what's happening is, remember how I was explaining that football field example? You got a part of the team and then everybody benched you. They didn't want you on the team anymore. Now they're running over you again. You don't want to be a part of that team. You want to get out. That's what we're doing here. So when you start to see the market, right, like let's come up back here, right, because this top one was a stop out. It was a trend continuation that did not follow through. This one here, retesting the lows of the day at the auction, and we still have structure on our side. We don't here. They're just having a hard time lifting on the auction. So the market's just not going to the long side right now. So now what we do is we get out of that trade, and this applies to all trades, all markets, all scenarios. Whenever you see structure change against your location, you automatically exit. Do not hold on to the market in case it reverses and goes in your favor. Do not expect a losing trade to become a winning trade when the signs of the market are showing you that it shouldn't. A closing price. Remember, we talked about a closing price. This low, because if you take a look, this low came below it and then went all the way back up and then came all the way back down. It closed here. That's where you get out of the trade at the close, because you never know, these wicks, they can pop all the way back up. You're still reacting on support and resistance. Okay. So now we can change the grid. Now we're up here. You see what I've done now? Because we just broke structure for the day. And this is the highest high structure of that day. Now we can look to turn the longs off because structure is against us and wait to see how the market unfolds. Market's dropping. This is really critical. Take a look down here. The low of day needs to be brought back to the low of yesterday's previous day's auction. So that's the previous day right there. So that's the previous day's auction low. We're going to keep going. Okay. And is it breaking down? So we just bring it down and we go back to the previous day's auction. We go all the way back here. So I just go back to the previous day. I just look for the lowest low where the structure break happened right there. And that's how the auction is created. So now what are we doing here? Let's go back and let's see when it broke this out. It broke this out right here. We had a closing price below. So I can't go back and cherry pick and say, hey, there's a resistance level, we could have shortened it. That's not how this works. You can't do that and cherry pick something that does not meet the rules of criteria. This is a trade probability enhancement document. This is not buy and sell every support and resistance document. This is about understanding that if you're going to be trading for the A trades, not the B and not the C, but the A trades, you're waiting for price to get back up there again. So we'll wait. Now we're sitting in buyer's territory. Never did take out structure again. We never did come back down. Let's wait. We got to close above the structure. So now we can take this low and attach it back here. Now we can revert back to today's auction because now we have the low of day defined by the lows. Does everybody understand that? I'm really trying to show you that you need to know, and any of you guys that are trading supply or demand or divergence, this is critical because now you're not going to be taking trades in the wrong locations of the auction. You do this with volume profile added on here, huge plus. Let's go to the British pound, or give me another market. I've got the debt markets, I've got gold, I've got crude oil, the yen, or the British pound. Crude oil. Let's go to crude oil. Perfect. Let's start over on crude oil. So let's start at the Globex because I always like to look at the current day. Excellent concept presentation. Thanks so much, John. Yeah, not a problem. I spent 4 months doing bar by bar, doing this with programmers and filtering out why supply and demand's holding in certain ways, why support and resistance holding in certain ways, why divergence is holding in certain ways. And then I started looking at where this is happening on the volume profile. And it's almost instantaneous that the reversals are happening. That's why low of day and high of day concepts reverse outside of the value area, unless you're in a really, really strong trending day. And that's why we go back to the previous day's auction. So you have context of where they reverse the market in value or in retail concepts. Okay. So let me kind of explain this for a second. And let's go in here. So we're going to go bar by bar. We did not get a close. Do you notice how we did not get a close? See, the close did not happen. There was no closing prices above that. This is why watching the close is super important, guys. Right above that high, we did not have a closing price whatsoever. So looking at this, okay, looking at this, this low is not the low. You cannot do that. So we need to take the previous day's auction, which is here and up here was the highest day's auction. So we're going to just map it off previous day. We're going to go like that. Okay. So what's interesting is if you're in the Globex, coming into the open, you would have to take the previous day's auction. By definition of the strategy, that fib level meets criteria. Okay. It meets criteria by definition of the strategy. Okay. Came very close to target. Very close. Didn't quite get there, but that's very close to target. Okay. Now, remember what I said. If you're in this trade and we have a closing price below structure, wait a sec, there it is. Do we hold on for a full stop out? Like, do you know how there's a concept called cut your losers short, sorry, and let your winners run? I hate that concept. I want you to tell me how to do that. Don't tell me what to do. Show me how to do that. This is how you cut your stop loss in half when the market's going against your trade. This is the critical component of what you should be looking at doing to reduce risk. When the market is going against a trade, you don't average down. You don't add to a losing trade. You wait for the market to unfold. Once it shows you that it's going against a trade, you cut your stop loss. You cut half your risk. You should be proud to cut half your risk because it's going to go against you. Let's go back here because I just messed that right up right there. Right there. Right there. Okay. So it closed. The auction just changed. You just saved yourself half a stop out. Okay. Let's continue bar by bar. We're not buying that low. We're turning demand off because we don't have structure on our side. Okay. Continue on. Continue on. Now we got to change the grid. We can't change the grid. There's no lows on the chart. So what we're doing, okay, is we're going to wait. We take this off and we have to wait. Wait for the market to show us. Take a look at the strong trend, right? Why are we not buying that support? Why we're not buying that support? Because structure is not on our side. It goes back to system enhancement rules. You don't buy every single support and you don't sell every single resistance. We don't sell that resistance. We don't sell that resistance. We don't buy that support. We don't buy that support. Do you see why price is running through the levels? Because the market doesn't know which way it wants to go. Does everybody understand that? Let's wait for structure. We can't wrap the lows around it yet. Did we have a closing price above structure right there? And honestly, guys, it sounds complicated at first, but truthfully, it's super simple. It's super simple. That's why I created this document, because it's a one-pager. It's literally a one-pager. And it complements this so nicely, because now we can say, okay, we have a structure break. We can take our level and we can map out our grid, and I'm allowed to buy support. I'm in an area where buyers should be holding if they hold it. Okay, let's turn plan long on. Okay, And let's go here, plan along right here, and let's wait for it to come up right there. So there's the long entry into the buffer zone. So see how the fib, see how it moved? You just gotta move it back. It's auto adapting. So you can mark your target here. Okay. There it is. Now let's go back here. You didn't catch that trade. At the close of this bar and of the open of the next one, the fill is here. There it is. Took a little bit of time, but multiple opportunities to re-enter into that buffer zone. 2 big trades on crude today. Now this is an 8-minute time frame. Might be too big for you. I'm using it for simplicity reasons, and I'm also using it for cleanliness of the chart so that we can easily see structure. Okay, Saramsa says, can the second long be considered an add-on since entry is hit before first trade target? Yeah, you could, but personally, you're only, I don't like to add to trades if you're already sized for your risk tolerance, right? Like you have how many contracts you're going to be trading. So ultimately it depends on, you know, if you went in half size and then all of a sudden it went in your favor and then came back to retest and you added to the same position in the same location, if your fill is the same spot, what's the difference of basically getting it all in on the first entry? If your fill is better, right? If you're averaging in at the edge of the zone and then it comes down to the fib and you're averaging in at the fib, that's different. Okay, that's advanced. This is super simple to just look at the buffer zone. You've got a buy area. You can enter in any place in here. Stops way down here. Target's way up there. Okay. Came back down. See how it came back? See how it's reacting right here? Exactly. Your theoretical average will be lower, right? If it's moving in your favor, but this fib level never moved, so that plan still stayed in the same spot, right? There it is. So we've seen a lot of trades. I could take a look at gold. Gold was a huge day today. It just moved. Serum says brilliant. but here's the thing, right? Let's separate this. There's a difference between a marketer and a trader. Looking at this, I could tell you all day long how awesome the software is. If I don't show you how to trade it effectively, it's useless to you. Second of all, who in here finds that they're just looking at too much information? Give me a why if you find you're looking at too much information. If your charts have too many indicators on them, or there's just too much noise. Okay, got a few people, not too many. Okay, a lot of you guys. Okay, Raymond, William, Berger, Albert, Gregory. Too many signals, Bruce says. Yes, too many on my charts, Williams. Perfect. So knowing this, was what I just showed you simpler than maybe what you're doing now? I'm not saying that what you're doing now isn't working or that you shouldn't continue to do it. All I'm asking is whether or not this was simpler to understand or it was cleaner to read. Barjinder says yes. William says yes. Simple when learned and cleaner. Yes. Let's take a look at gold. Okay. Globex. I like to go at the beginning because what the low of day back here and the low of day back here is different. Okay, so let's just go back here and say, okay, wait a second. Let's start. If we're sitting in here, we don't have any structure defined, right? If we're sitting here, we don't have any structure defined. So we need to take the previous day's auction because technically, let's just pretend this is one giant day of volume profile. And let's just pretend, let's say that this is the value area. Okay. Well, wait a second. Doesn't that mean that up here is the structure high change and down here is the structure low change? Isn't this for the institutions to set the value? Right? So when we think about this, we've just defined where they've set the auction for the day. And we said, wait a second, that's easy to read. Okay. So if we're looking at this, we're going to wrap our grid from here to here. So coming into the day right here, we have negative structure in buyer's territory, completely not allowed to trade it. Let's wait. Let's wait. No closing price above structure. No closing price above structure. No closing price above structure. Just keeps dropping. Now we're sitting down here at the low. Wait a second. Is there any lower lows after we come back down here? Look, we never close below the low. Isn't that interesting how you look at the closing price? We never close below the low of the auction. That to me is something that I studied so much. I was looking at that. I said, man, look at the lows are always holding at these auction high and lows. And then looking at closing prices, well, actually, Victor's wondering when we're going to talk about the deal. To be honest, if you have to leave, we can send you a recording. I want to show you system examples because this is a trading system. This is not an indicator, right? So I think it's important to understand. If you have to step out, by all means, we'll get you the offer in the email and the video. The big thing here is understanding that the closing price did not happen below here. And so what we need to do is we need to know that's still hold intact. Let's continue up and let's continue back here. So do you see how this structure changed right here? It's hard to see that on the fly, but it definitely did. So now what we can do is we can move the auction down over here because we have the low for the auction. And technically we have the high for the auction down over here, but it's very tight. It's very, very tight. Right? So we can't short that. We can't short that because it's against structure. In structure, we look at close price, not the wick, but the auction high and low is also close price. No, we take the high and low of the day from the structure break. So we look to invalidate structure breaks by closing prices, but we still want to take the high because technically, take a look. There was a close above the structure break here, which basically means that this was the low of day structure break. There is a closing price below here, which technically means that this is the high of day structure break. Does that make sense? We wrap it around that. But if we're looking at it from the current day, we're sitting here in an area where we're really tight. We had a structure break here, and we also had a structure change here. So look at this tight range we're in. We're in an oscillating range. And interesting enough, gold was range bound until it popped out earlier. Let's take a look. Can't sell that resistance. We're against structure. Even though we're in retail area, you're not allowed to sell that. Take a look. Good thing we didn't. And when it breaks above the high of the day, you go all the way back and you connect to the highs. And guess what that allows you to do? That allows you to buy this fib level long. Right here. And let's see if it comes back down to hit it. There's the entry. Okay. There's the entry. Where we would get the stop out. We would get the stop out on that. That would have been a stop out for sure on that. That would have been a full size stop. Yeah, that would have been a full size stop. Let's take a look and keep going. Did we get a closing price below that break? We did not. We did not get a closing price below that break. We cannot short that resistance. We got a closing price below here. Now we can change the auction back to here. Okay. And now if we come back up to test that resistance level, we have structure on our side. Shorts on, turn the short plan on right here, boom, okay. Got stopped out on the euro, on the gold market, okay. Gold took us out on both sides of it, okay. Do you still like to trade even though first target was hit before entry triggered? That's a good question, Sorum. Ultimately, first target wasn't hit because it never came back down to retest support before it came up to that area, okay. And so it's a good example, okay. And you have to show the fact that even when you have, like if I looked at every single market, there was 2 fantastic trades on the NASDAQ. There was 2 really good trades on the ES. One was missed because it would have been front run the tick on that. The euro, okay, we had several trades on the euro. We talked about continuation trades. Look at the British pound. We didn't even look at the British pound. Okay, we could look at it. The yen, crude oil. Okay, we had 2 big trades on crude oil. The gold had 2 back-to-back losses, but the exact same rules were met on every other. Range was too tight on gold. Yeah, but not only that, we had massive, like gold was just a weird market today. It was a very, very weird market. When you enter, can you add the condition that delta volume must be? You could add whatever you want, Vittorio. You could actually look at order flow at the areas. That's a good question. I think another thing too is understanding the auction here, and can you buy that support level? No, you can't. Even though it held, you can't do it because it goes against everything else we've just talked about. Sometimes you're going to have a market that's going to do everything off the day that you did it, right? It's no different than looking at Raul when he trades market profile. Today, him and I took the same gold trade and we both got run over by a freight train. But it's the same trade that he gets 100% return on of his counts. He just trades it every day, right? So you got to remember, like, there's reasons why you have to give it time, and you also need to understand that these are very restrictive rules. So when you follow very restrictive rules, you're not going to be taking a whole lot of trades. You're going to be taking high quality trades. Okay. Now we're going to bring this back up to the auction again. Okay. Let's continue on. When it closed above that high, we move the auction. Then we can come back and enter into support if we chose to. Can you take this trade? Can you take this trade to go long? You cannot. No, you cannot. And the reason for it is because we closed below structure coming into the entry zone. We closed below structure coming into the entry zone. Okay. So therefore, you're going against structure. It could very well work, guys. It could very well work, but it's something that I'm not willing to participate on the risk on that. Good rule to not have. Do you guys see that? So even though took stops on valid trades, we're reducing losses by following the same rules. So this is something that takes months and months of studying. Raymond's asking, when would you change structure swing size? I never go below 2, and I never go above 1, or I never go above 3. It's either 2 or 3. I prefer a 2 on an 8-minute fractal. I would go to a 3. This is a good example. If you're using scalping timeframes, I'm certainly going to a 3. If you're using swing intra-swing bigger than day or like day trading timeframes, like a 5 or an 8-minute time frame, I'm using 2. That's a good rule of thumb, Raymond. So if you're scalping, swing setting of 3, he's asking questions about the market structure. I'm using a swing setting of 2 on a day trading time frame. An 8-minute and a 5-minute is a day trading time frame. No, Bruce, but I'm going to be teaching strategy classes on it. Bruce is asking a really good question, and basically he says, will Michael be trading this system in the Wednesday, Thursday future sessions? No, but I'm going to come in and I'm going to hold some classes on it, and I'm going to probably take the room over 1 or 2 days and do it with you guys if that's what you guys would like. Give me a why if you'd like to trade this in a trading room with me. Sometimes I'll give one of the guys a break. We'll come in and we'll do this together, and we'll map it out and we'll do it in real time. For those, because there's a lot of you guys that are using the fibs. I love the fibs. They're just really, I trust them. They're just really strong and powerful levels. Michael loves the fibs. Even Raul loves the fibs. The only difference is now I've built it into a system that makes sense around volatility adjustments. So even if you were not trading it as a system, but you were trading it as an indicator, you could still put the buffer zones and use the edge of those levels for targets, because you can know when to expect the levels to start reacting, which is really important. Okay, let's go in here and map it out. So we've now defined a new structure high of day. So we're going to go bring this back. We're going to bring it down because they're just oscillating this market left, right, and center. So the range was tight. So let's keep it back here. So here we go. We have resistance on our side here. Okay, resistance on our side. Now here's something to be aware of. I want to talk to you guys about something a little bit more advanced, but I like to share some advanced stuff with you guys. So if we seen that levels are failing in here, it failed on the support side over here. Okay, it failed on the support side, and it also failed on the resistance. What this starts to tell us, right, if you've got a back-to-back fail like that, one would say, well, they're really keeping this range bound. Remember what I said about the auction? We've got a volume profile here, and we've got the value area here, right? That's most likely what's happening in this range right here, okay, when you look at volume profile. And so when we do this, you have an opportunity to short this resistance. If I turn this to shorts right here, we're in a resistance level above the 50, which is valid with structure on our side. Okay. You would start to think, okay, they're not really holding in the middle of these levels. The better trades are more likely going to be up here at deep retail and deep value. So if you have an opportunity, or if you're somebody that says, listen, we're not in those areas, I'm going to take a trade right now, you go in with half size here, because the first two trades were stops in the middle. So you don't know whether or not they're going to reverse this over and roll it down. And they held it from that level, right? It did work. Even if it worked, I would still look to be more risk adverse, because you're already down two trades. These are advanced trade management decisions. These are more of running a business as a trader decision, right? But it still works. So you see, loss, win, following same rules. But the other 5 markets we looked at, we had probably 75 to 25% wins versus losses on all those trade locations, right? So let's continue. Now we're down in, right? Take a look. Came back up with the wick. We're still in seller's territory, re-entry opportunity, okay? And it didn't hold this time, right? So this market is just a messy market today. We're on both sides of it. And that's going to happen with every system, no matter how good the software is. You're going to have days where, no matter what you do, it's one of those, you cut your losses and you just go golfing for the day, or fishing, or go write a song or something, right? If we go in here, it's just they're just keeping it oscillating. Yeah, strike 3 and out for the session. You're just done for the day, right? You've had 3 losses, 1 wins, but they're not respecting the levels in the middle of the range, right? If we take a look at the bond market, let's take a look at the bond market for a second, okay? Who in here trades bonds? This is ZB, okay? So if we're going in here and we're coming in, okay, there we go. So we come in here like this, and we're starting in the Globex. Okay, Lynn and Sorum look at bonds. Okay, perfect. So there's a structure high that sets in here like that. So if we close above that structure, it sets the Globex low, which we did right there. So that's the low, but we don't have a high until here. So we need to map out the grid like that. So there's the grid, right, like that. Okay. So we can buy this support level, can't we? If price comes back down it, we can buy it because we're on the right side of structure. Okay, let's continue. So there it is. We had a close below structure. Now we can adjust the grid and we can bring it to the current day, because now we have an auction that's defined by the day. Okay, we have an auction that's defined by the day. So if price comes back up to resistance, I want to start planning that short because structure's up to the short side right now. So we turn short plan on, near plan on like that. And I'm just going to move that off for a second just to keep it clean, just to show you. Obviously, we know we're in retail areas at that location. So I'm going to wait to see if they come back up. There's the entry right there. Remember, stop's up here for a reason. Why is our stop here instead of right here? A lot of people are putting their stop right here. And then they get upset when it gets high ticked, and then it comes up and then it reverses and goes in their favor. Remember, there's a buffer zone, and we need to factor in the volatility. So let's go back. Where was the plan at the original target? Target was down here at the fib. Now, if you've got a target sitting there right at the fib, any smart trader is going to put their target slightly in front of it so they don't get greedy. Okay. See how the fib move? See how the fibs are dynamically moving? See how this moved here? See how that changed? When you see that, you move your target because your plan is changing. Volatility-based system. I can't stress that enough that it's all dynamic. So it automatically will give you where you should be putting your targets based off the change in volatility. So target's moving up a little bit. Okay, there it is. Structure break still. You could reshort that if you wanted to. Came down, hit second target. That's a clean short. Does everybody see that? Yeah, Sir M says sweet. How many of you guys understand the system? Because I could just sell this software and say, go and buy support and resistance. But what I've done is I've helped you now understand that if you just follow this roadmap, there's no way you're on the wrong side of the market. You can't be on the wrong side of the market. You're always on the right side of structure. And now you always have the logic. And the only market out of everything we looked at, we didn't look at currencies, but the only market that didn't perform well today was gold. Let's take a look at the British pound. Who in here trades the British pound? Anybody trade the British pound? I don't want to look at a market that nobody looks at, but I tried to basically pull every single market. William looks at the British pound. Perfect. For William, we'll do it because it's what I'm doing is I'm rehashing the same rules over and over and over again. It doesn't change. So the nice part is whether we're looking at the NASDAQ, the gold market, or the British pound, it's all the same. Let's start at the Globex. Okay. Yeah, you get some big moves in the pound. Absolutely. Today was huge moves in the pound or in the euro too with gold because we had some announcements today. So let's go in here and take a look at this. And one thing I want to mention inside the system is you have the ability to change the strength of your fib level, not just the strength of how many levels you have, but the strength of your fib level. So if you know you're trading on an 8-minute equivalent, you can set your system to an 8-minute fib level. If you're trading on a 3-minute equivalent, you set your 3-minute fib levels. It's all relative to the time frame that you're trading. In fact, you could be trading on a 3-minute equivalent and put it on a 60-minute fib level. Right? You could do that. It's a multi-time frame system. And we have traders that use the inside of that, and basically they'll trade on a 5-minute, but they use 15-minute fibs. It's really dependent on how you choose to do that. You could do that as well in here. Let's map out the auction. Low of days here because we had a structure break there. High of days here because we had a structure break here. Let's pull this up. There's your auction. Okay. So we can't buy this support level, even though it's the Globex coming in right off the open. Can't buy it because we had a close. We had a close below the fib. So that's off the table. So we have negative price action structure in a wholesale location. So we can't do that. Okay. Did this close? That's the question. Was it a close above structure? It was not. It did not close above. Therefore, buying this fib level technically is not allowed. Now we can adjust the fib structure here. And if we want to re-enter the fib, we can, because now we have confirmed structure on our side. Let's turn the long on, trade plan master, long trades on, near trades on, dominant trade planning is long, because we're looking at the long side of this market. There it is. These trades are killer, guys. These, like if you're on the right side of structure and you're not using too small of a time frame, but you just follow the daily auction rules, you're going to be happy. And you don't have to get rid of what you're doing if you're already doing something well. Just watch the system. If you just have it on your charts, just watch it for a couple days and you'll see that no matter what you're doing, how do you determine the volume number of the various instruments? Rick, that's a great question. We're doing a webinar on that in 2 weeks, and it's a big webinar. I started designing a server, an analytics server, in November of last year, and I've built fractal models for every single market. It's going to be a service that's going to be sold to institutions as well. I've got some hedge funds that talk to me, some prop desks talk to me about the server, but it's a model that basically converts time to volume and time to range, right? We'll talk about that, Rick, after, but I just might mention that they're all equivalent to an 8-minute time frame. What will be good is to have as part of the trade planner a risk so it can determine how many contracts per defined risk. So I'm saying, yeah, that's actually more for on the execution side. Now you're looking more on like a trade management tool, and we're coming down the road with that, but rest assured it's in the works. Okay, so there it is, guys. There's a huge trade. Like that was a big trade on the euro last night. That was a huge trade on the British pound, sorry. See, these are big trades. And let's take a look. Can we enter back here at the fib support? Sure we can. That one just kept going. Can we enter this fib support? No, we can't. We cannot. Why? Because we're at 75% of the auction. We are in yesterday's retail location. Eventually, they're going to start selling this market. Do you want to be trying to buy strategies, mainly this one, in retail locations? The answer is no. Even if it works, you just can't trust. You just can't trust it long term, right? Long term, how do you trade in front of news? Stand down or rely on auction still? Sorum, it's a preference. I know traders that don't mind trading into the announcement. If you're in a top step combine, you can't. If you're trading any type of smart decision making, you're going to close positions and then look to re-enter a couple minutes after. Obviously, if you're down money in a trade, you're just going to hold on and hopefully it just goes in your favor. But if you're not in a trade, there's no need to add the risk, right? See how it's sitting in here? Did it ever come to hit the stop? See how the stop loss moves? Let's go back here. You're not entering long up here, but it never did come down to hit that stop loss right there, right? And it did hit, but you're not entering those trades anyways, right? You're just not doing it. Okay, now take a look. Took out structure right there. Now what we can do is we can map this out, bring this over, and now we know where we can sell resistance. Look where we are. We're right at a resistance level. Turn the plan long off, short plan on, dominant plans short, so that you can see everything in focus. And then what you do is you say, okay, at the close of this bar, at the open of the next bar, we can look to get short here. Look where it came. I don't even know. I don't trade the British pound, guys. I don't even know if it came into this level, but it came to the tick, to the buffer zone. See what I'm saying? Re-entry didn't quite get there. It did hit your targets though. Now hold on a second here. If there's a structure place right here, can you re-enter this? If it came up and hit it, without closing above that, Okay, if it came up with, let's say, a high wick and then came back down, that's valid, because they do that sometimes. They're going to drive prices up and then they're going to slam it back down. But if you entered that trade and then it closed above, you'd have to close out your trade. You'd have to get out of the trade. Remember the risk reduction rule. But your entry is on the first one. To the tick accuracy. Now you're going to say, well, Sean, why is this software so important? Well, the buffer zones are dynamic because it's all based off average volatility. So if you watch these levels, if you take a look at them as they unfold, it didn't on the short side because the average volatility came in. Take a look at this one here. Watch this. Do you see how it closed above? In hindsight, it looks great, but by definition of everything we've done to cut risk on the other losing trades, you can't take that trade. You can't take it. Let's see if it closed above. Did it close above? Right there, close at. It did not close above. So if it closes above, okay, if you're trading two lots and target one is hit, do you leave the second contract sale break even or move to break even? That's a discretionary decision. So it's really up to you. It did not close above the highs. It closed at the highs. So this is a decision you have to make. I have not factored in the rules to this, but I will tell you this. I'm looking for a close above. See how this one came up and it did not close above? It did not close above. Closing price is key, guys. Closed above. The structure is here, though. See how that structure changed? It came all the way up and it never closed above. So this is the structure right here. It never closed above that structure. That's interesting. See that? You pay attention to the closing prices is key, guys. And it's not something new. It's something that I've been watching for in a long period of time. Closing price is key. You want to pay attention to the closes and where structure was, because that's where they're showing you sentiment on the bar by bar basis. Okay. Now, guys, we've spent 2 hours on this, and there's a lot of information that I've covered. Trust me, there's a lot. I spent months building this, but does everybody understand this? Now, your entry can be defined at the edge of the buffer zone at the midpoint. Your risk should be no less than 1 ATR for price to breathe. Your targets are based off risk and reward set by the ATR factor and the planning capabilities. Okay. Money management is based off your tolerance. I can't tell you how much contracts to trade, but what I can suggest is you use money management calculators. If you don't have any, send us an email. We've got some in our members area if you're subscribed to our trading room. And then everything is automatic. The only thing you have to do is follow the system rules right here and then map out your auction. If you map out your auction, you're always on the right side of price action. And then it's just about waiting to get to the fib prices at the right locations. And if you add supply and demand to this, you just stack the odds in the right hands. If you're in a resistance area and you have a supply zone right here, right, and you come up to a resistance at the structure break, that's just screaming to get short. Screaming. Okay. Let's talk about this. Does anybody have any questions about what I've explained today? Give me a why if you understand it and if you like it. Give me one why if you understand it, two whys if you like it and you understand it. I want to know if you guys took something out of that, and I want to know if you guys can relate with it, especially for those of you that are using the fibs already, and for those of you that are new. Maybe this is the answer you've been looking for. We're not here as high pressure sales guys. We're really here to share months and years of experience. Yes, we sell software. Yes, we run trading rooms, all that, but this is serious stuff. And you're taking it seriously. If you're here, you're serious. You want to learn how to trade, or you want to become better, or you want to cut your losses, or you're not making it and you want to change. Okay. So let's rehash it. It's a confluence indicator built on multi-time frame fib confluence. It's an all-in-one semi-auto fib trading system. It's a semi-automatic trade planner, it's a semi-automatic risk planner, and it's all built off dynamic volatility and fib detection. Okay? So what I'm going to do is I'm going to share with you guys the offer so that you guys understand, and we're going to basically, yeah, I see your questions. We're going to talk about this. Okay? So based off the price point of the previous GOldenFibs indicator, okay, this is a serious upgrade, and it's a complete new enhanced version of the software. It's not the GOldenFibs software. It's a system. It's a completely different engine, right? So what we've done is for new customers, there's a one-time only launch price of $14.95, okay? For existing fib customers, there's a $500 upgrade, which brings you to approximately this price within it to take maybe a couple dollars, right? Depending on the promo that ran. However, it works on every market and every time frame as long as it's used in Ninja at this time, and it will be available for TradeStation eventually. Okay, so you'll get 2 licenses. Obviously, support comes with it, but I want to talk about what it looks like inside the indicator. So let me just inside the software. So let me just put a link in here. If you are a subscriber and you are a Fibs, if you are a GOldenFibs customer, okay, if you are a GOldenFibs customer already, all you need to do is log into the members area, okay? I've put the link in here. If you have a password and you're a customer of ours, you log in and there is essentially a purchase button, okay? So let's do this here, guys. You come inside, you log in, and you basically order inside the members area, okay? So you can upgrade for $500, and then you can install the new version, and it'll replace the old version, okay? Now, if you're a new customer, okay, if you're a new customer, I'm going to put a link in the chat box here, guys. Okay, can you guys tell me if you see it? Give me a Y if you can see it. Very simple order form. You have the option to pay with credit card or PayPal. And then what I want you to do, okay, this is very, very important, okay? If you go to the website and you have questions on this over and above the tool, you go to our software page, go to NinjaTrader and just go to the GF system MTF. What I've done inside the members area is I've actually created training videos on this. So if you're a subscriber, you can download it. There's some training and there's a user manual, a detailed user manual on all of the details. So when you download the software, it's going to bring you into this. And what we've done is we've created all the parameters. Everything is in here. But what I've done is I've mapped out the 6 different measurements and how the fibs are calculated. But I've also added a whole section, okay, on the, let me just go down here, on the buffer zones and understanding what's driving the buffer zones and how the ATR is working above and below price. So that if you really want to know what's under the hood, it's in here for you to learn it. Hopefully I did a good enough job today explaining it so that you don't have to go spend your entire evenings and weekends reading user manuals. Just watch the videos that we've basically, we've built for you, okay? Yeah, not a problem, Bhajinder. Yeah, not a problem. So let me just kind of rehash this. Give me a Y if you're planning on, let's do this. If you're an existing customer, give me a Y if you plan on updating. I need to let Ben know how much support he's expected to handle because I need to know how many people he's going to have to basically monitor for licensing. Give me a Y if you're planning on upgrading to the new GOldenFibs system. Everybody who buys the upgrade or the new system, okay, everybody who buys the upgrade or the new system is going to get the documentation for the trade planner that I built, or basically the trade system planning capabilities. And then what I'm going to do, I'm going to have you email us in, and I'm going to send you that in a doc or in the email so that you can have that. But more importantly, we're going to basically wait for everybody to get the upgrade and everybody to get on board with that. And then I'm going to basically take the wheel and steer in the trading room, and we're going to basically we're going to basically get me running the trading room for a couple of days, and we're going to go into that, and we're going to actually teach that strategy, and I'm going to share that with you guys. We're going to do it in live markets, okay? Give me a why if that makes sense. Perfect. For those of you that are new in here, did you learn anything? Perfect. It says promotion ends. Enter date here. We run the promotion till Sunday. I just forgot to put that on the slide. The promotion runs until Sunday. Okay, so let me put the links in here. Okay, so this is for new customers. And then if you're an existing customer, just log into the members area and purchase the upgrade on the inside of the site. Okay, it's right there on the home page as soon as you log in. Okay, perfect. Soon, Saram. Yeah, soon it'll be ready soon. What's your guys' take on that auction theory? What do you guys think of the auction process? Being on the right side of the daily auction. Really helped. Produces high probability setups. Is there a time period associated with the upgrade price? Well, to be honest, we're running them till Sunday, Bob. Till Sunday. Yeah. William says he likes the auction process. Brian says it will be better when automated. Yeah, so here's the cool thing. Brian knows the inside scoop because Brian and I had a talk yesterday. Brian called me up. He's been one of our customers for a long time, and I'm going to put you under the bus here, Brian. But I was actually explaining to him that we're actually coding an indicator called the daily auction. So we're going to be coding an indicator. It's called the daily auction so that you guys don't have to do that manually. We're still in development. It takes a lot to code those things, the drop downs, everything takes a long time, and to beta test them. But I wanted to get the fibs in your hand now because we've had a lot of people asking about it, a lot of people wondering it. And what's really nice is it works simultaneously to the SD volume zone. So when you combine them together, or even market profile, like you start getting everything in the buy areas and the sell areas of the daily auction. The fibs are just amazing though because they're so powerful. It's multi-time frame. So when you use multi-time frame confluence levels, it's just really, really, really strong levels. Especially, I mean, you've seen the trades. We went over 5-6 markets. Yes, it does, Barjinder. It works on all of the composites as long as you have data feed for them in Ninja. Yeah. As long as you have data and you have it on Ninja, the software works on it. Yep. And it's super fast to load. It's all custom graphics. It's not loading tick data. Super fast, super reliable. Yeah, it's a separate tool, William. It's a completely different product because it's universal across everything. So the fibs, divergence, the SD volume zones, but we haven't even finished coding it. So I don't even have I usually go based off the time and the difficulty it takes to code the products. I usually rely on the coders and the amount of code and that stuff and the amount of time it takes to test it and stuff like that. So hopefully you guys enjoyed the event. I'm going to take the rest of the evening and go hit the gym and do some exercise. I think it's well deserved. And I think you guys if you guys enjoyed the event, we'd love feedback. Send us an email. Hopefully you guys enjoyed it. I love teaching this stuff. We spent a lot of time here to help. So hopefully you guys learned something from it. And we've got the fib system live on the website. If you need the recording or if you're interested in it, just wait. We're going to be sending it out via email and we'll get that in your hands as soon as possible. Appreciate your time, guys, and your attendance is always valued. Take care, and we'll see you guys tomorrow. Yeah, Brian, I can send you that. I have a spreadsheet for that. That's basically how I've defined all my fractals for time frame conversions. We're doing a webinar on that in 2 weeks.